Hey there, everyone. Welcome to another episode of the Managing Partners Podcast. I'm Kevin Daisey, and I'm your host. And I have spanned the planet looking for the best guests that I can find for you all. So appreciate everyone that tunes in on a regular basis to this show. And today I have Adam Williams, who I met recently at a conference. This was an eight-figure firm that's head up by Louis Scott. You might have recognized him as a guest on the show and is a very successful law firm owner. And Adam was there giving a talk on taxes, how to save money in your pocket, running a business. And I took quite a bit of notes, and I thought I knew a lot. There was definitely a lot of things that I picked up that he shared on the stage that day. So, Adam, welcome to the show.
Man, I hate to break it to you, but if you've been crossing the globe trying to find the best guest, today may be the last episode. Like this you found him.
This could be it, guys.
That's it. Like,
and gals.
Let's set the expectation early on. This is going to be awesome.
This is going to be awesome. So, if you want to save money or think you're already saving as much as you can, you got to tune in for sure. So, and then after this, Adam will blow up and get so popular after this episode, you might not be able to get a hold of him after this. So,
that's always the hope. What's funny is that's what happened at the 8-Figure Firm event. We do a lot of virtual events, a lot of live virtual, a lot of pre-recorded stuff. And we always get emails afterwards. But that event, I couldn't make it from the stage back to my table. Like, people were like attacking me because they're like, why didn't I know any of this? And I thought I made that pretty clear, but apparently not. So,
I think I was one of those. I came up to you right away and was like,
"Hey, you may have had a little more restraint and waited until like the lunch break or something, but or maybe happy hour." But yeah, it was interesting because that we've done this live a couple times, but never in front of an audience quite like that, and it really resonated. So yeah, I'm excited.
Yeah, quite the audience there, and a lot of great people I met at that event. So kudos out to Luis and 8-Figure Firm. Well done. But don't worry, with the show, we do provide full-time bodyguard services after you're a guest on the show, just like a president, so
I love it.
Our expense, no worries.
I was on another podcast earlier today talking about defunding the IRS, and I'm like, I'm worried my door is going to get kicked in now. And so yeah, the bodyguard services, I may need them more than you think. So yeah, I love it.
Well, I'm glad I can help. So everyone that tuning in, first off, Adam's website, just so you can go check it out. If you're listening on audio, it's very easy. It's Pennywise.tax. So Pennywise, like the punk band, which I loved growing up, or Pennywise like the clown in It. Either one.
Not enough people get the punk band reference. That was good. I knew you were super cool. You just proved.
One of my favorite bands. I went and saw them live not too long ago, and it was epic. Anyway.
Yeah. So my daughter she's about to turn 7 years old, and her name is Penny. So that also inspired the name a little bit. So
I love it.
Yeah. Excited.
So yeah, Pennywise.tax. Go check them out anytime during this show or afterwards and learn more, connect with them. And I'll be saying that more out for the show. But Adam, let's get into it. And the topic that Adam has sent over to me to talk about is how to save $100,000 on your taxes this year. Pretty much that's all we need to know. So, yeah, Adam.
Let's not undersell it.
Yeah.
So
kick us off. What do we got?
What I really love about the streaming recording platform that we're using is I typed my name in here and didn't put Esquire at the end of it. So I think it's important for a lot of people to understand your audience. Like, I'm one of you. I've got a law firm. I went to law school. I passed the bar exam. I passed the MPRE, the ethics exam, barely, but passed it. Got my license. So yeah, I've been in the shoes of the law firm owner, and I'm married to a CPA. But between undergraduate and then transferring undergraduate and getting my MBA, I've taken Intro to Accounting 3 times. I think I got a B- the last time that I took it. So I'm not the accounting guy. And frankly, I'm not much of a lawyer. I'm really an entrepreneur. And we've built these businesses and established these businesses. And I love your Inc. 5000 trophy in the background, because mine's coming later this year. And
yes,
we had the problem that a lot of successful business owners, folks who are self-employed, lawyers have, is we would sit down with our accountant in the first quarter of the year. They would prepare our taxes and they would say, congratulations, this is what it means to make it, right? I'll never forget the first year we showed 100,000 of income on our taxes. It was a big deal, right? I created that for myself. And then she's like, all right, you have to write a check. We had withholdings and estimated payments. You got to write a check for 16 grand to the IRS. I'm like, I don't have that kind of money. Are you kidding me? Like, but her response was, congratulations, this is what it means to make it. So we fired her and found a new one the following year. And as we've scaled our business and scaled our impact and scaled our income, the tax bills have gotten bigger. And it got to the point where our accountant would file our taxes and say, what does next year look like? And we share the numbers because we budget and have a business plan. And the best he could come up with was, wow. Like, that was his email to me. Wow. And here's the quarterly payments that you'll pay this year. And at this point, my wife and I had built a really successful business, helping law firms in particular get the employee retention tax credit. We did a bunch of work on PPP loans and EIDL loans and all that pandemic stuff. And in here, we had built this expertise. I'm admitted to tax court. She's a CPA. I actually we both started our career at a Big Four accounting firm. And it's like, man, if there's ever a reason to start a business, it's because you see this pain point and you know how to solve it. So we spent about 2 years preparing, which is the least entrepreneurial thing I've ever done. Usually it's like, let's go sell it and then figure out how to build it. But we spent about 2 years getting ready. And that last accountant, had we followed his advice, we would have paid estimated payments to the IRS of about $700,000 that year. And a couple things happened. One, the year didn't go as well. Some of our income got deferred until the next year. And
so you would have paid more than you needed to.
Totally. And we went out and implemented some of the strategies that we had studied and learned and researched. And we reduced our tax bill by about $250,000, like $250,000 that we got money we already made, that we managed the employees and we brought in the clients and we did the work and we collected the money, and we were to keep in our pockets an extra $250,000 that year. And that end of that story is the exciting part. Yeah, there you go. A lot of people don't get to that point. A lot of people stay in the misery of pay your estimated payments. On April 15th, when I file your taxes, you'll find out how much money you made and how much you owe, both of which will be a surprise to you because there won't be enough left over. And then we'll go and do it again next year. And it's a shame. I mean, this is the way that the accounting and tax preparation industry is built. It's like both sides are at fault here, because the client dumps the shoebox full of receipts on their accountant February 15th. The accountants have their insane busy season, and then they go and take a much needed month-long vacation after April 15th. The industry and the system is not built for accountants to sit down with their clients throughout the year and say, how's this year look? Here are some things that you can do. Let's go out and do it. Let's go out and document it. The number one reason that the IRS disallows deductions is because of inadequate documentation. So
how's your business growing? Is there any new plans for the business?
Is it going
to start another business?
Exactly. Is it going ahead of pace? Is it behind pace? Is it on pace? And continually managing that. Our business this year is, again, same issue. We're behind pace, but our third quarter is going to be insane. Well, we need to be ready for that, because we're going to be running out of time at the end of the year to implement some of this stuff. This is only half joking. At the end of last year, I had to run out and buy an airplane in November, right? Like that was one of the strategies I implemented. Great tax saving strategy if you're into that type of thing. I would have rather, what's funny is airplane prices go up at the end of the year for exactly that reason. Like, people know that business owners
you're going to get a better deal at the beginning of the year.
Exactly. Yeah. You want to find an arbitrage opportunity, buy your airplane in January and sell it in November. So yeah, that's why we built this thing. We realized we've worked with a few hundred business owners, law firm owners in particular, on the ERC. we know their numbers, we know their financials, we know what their accountants have been doing for them, and realized, man, there's a massive opportunity here to save people a whole bunch of money without putting them at risk, without, they're going to have to pay penalties and interest and get thrown in jail. No, none of that. Like this is done. Lawyers get this better than most people. The tax code is tens of thousands of pages. And then there's tens of thousands of court cases and regulations and other things that interpret that tax law. There's lots of gray area in there. So as the lawyers, like, let's go get it. Let's see where it is. And then let's have a conversation with you about where is your risk appetite? How interested are you in defunding the IRS and putting more money in the pocket? Or is it just the low-hanging fruit that there's zero risk of anything ever happening, and helping you make that decision? So that's why we started.
I think, too, as the owner, obviously the owners of the firm listening, which is primarily my audience, and that's who I have on, is as an owner, right? There's other things that you can benefit from, and you have other things than just your business. You might own, I own multiple businesses and properties and a business with my wife, and there's a lot of complexity there, but there's also a lot of opportunity there as well.
Yep. So that's one of the big things. I joke about the airplane thing because that was something that I wanted. It's really important for us that we don't make people spend more money than they planned on spending, right? If you don't want to buy the vacation house or the boat or the airplane, if you don't want to invest more in your retirement account, we're not going to make you do that. Or the really bad advice, go out and buy all your office supplies at the end of the year, prepay your rent. Like, you can do those things, but let's have like a cash flow discussion around this too, to see what even makes sense for you. So it's important to us. Again, you own a business, it's a challenge. The business should be supporting your lifestyle. So what do you want your lifestyle to look like? If it's not a beach house or a mountain house, then let's take those options off the table. If it's you love to have money invested in the stock market, cool. Let's use some of the vehicles and strategies available there to get it in the stock market, if that's what you want to do.
Yeah. I think it's all, about what you're trying to accomplish, right? And then, I think the other thing too is like how you like save as much on taxes, but also depending on what you want to do, where does your income need to be able to apply or get certain things outside of that, right? So
Absolutely.
you want to know what's going on so you can balance that out, right?
Yep. If you need to provide financial statements to a bank that have certain covenants, if you're thinking about selling your business or your law firm, there are things that you may or may not want to do based on that. So yeah, but I think that's the point. Is I don't think I know that these aren't the types of conversations that people are having with their accountants. I know that they aren't. So I'm going to give you a good example, and you're a marketing guy, so I hope you appreciate this. If you haven't picked up yet, I'm an adrenaline guy, right? So I have a race car. I have it's old, 2000 something Porsche 911, and I realized when I go to these events, there are a lot of entrepreneurs there. I don't know if it's just because we have the lifestyle and the money, or if it's like we need that adrenaline rush. Like, let's not drive our business off a cliff, but let's go take a turn at 130 miles an hour. Yeah. So I started a campaign, put it right on the side of my car, of writeoffyourracecar.com. And I got the stickers and the funnel built like the night before an event a couple of weeks ago. Man, I pulled my car off the trailer and they just like jumped on me. Like, what is this all about? Right? Because all these guys want to know, how can I have like, I'm here. This is my hobby. This is my lifestyle. This is the way I'm spending money. You're telling me I can have Uncle Sam help me pay for this? Yeah. In some cases, it's not for everybody, but in a lot of ways you can make this happen. So that may not be the most successful marketing campaign I ever run, but it's definitely my favorite. So yeah, that's a really good example of exactly what we're trying to do. Like, let's look at your financial situation. Let's look at your family situation. Let's look at the things you want to do, and let's use the tax code to your advantage. I think that's what, I don't know. I studied a lot of economics, so this stuff always came up, but the government uses the tax code, yes, as a revenue generator, but also as a way to create incentives and disincentives. You want people to smoke less? Tax the crap out of cigarettes, right? Yep. Mm-hmm. You want people to invest in helicopters? Offer some tax credits for buying helicopters, which they've done. So there's
Real
things
estate.
out there. Yeah, real estate, great example. There's things out there that the government wants people to do. Owning property is a good example. And they create incentives through the tax code to do that. And a lot of business owners either don't know, or they're not aware, or they just don't think that things apply to them. And that's where a really good advisor can come in and say, here's the opportunities you're missing. Here's the all-you-can-eat buffet of all the opportunities that are out there in the tax code. Let's go pick the handful of things that you want and go and put them into place.
That right there is something that we've always lacked with our CPA, and the planning, the strategy, always last minute. I feel like maybe there was a year or two where there was a little bit of that, and then just kind of like it went away. And it's always like my wife asking me, "Hey, when can we file our taxes?" Well, whenever our corporates are done. I don't know when that's going to be.
Yeah.
Last year that was like October. It was ridiculous.
We're actually picking up clients now. It's May 30th. It's 6 weeks after the tax deadline. We're picking up clients right now to file last year's taxes, just because they know how screwed they're going to be. And then we'll get to know their numbers and can implement strategies through the next 6 or 7 months of the year. So yeah, it's almost scary how much opportunity there is for us. Any other tax attorney listening to this, we're hiring. So yeah, it's exciting.
Yeah. Well, I think, just what you said is like what I think me as a business owner, my partner, like we want that from a partner. We want that from someone. Like, what are our opportunities? Not just like what we're doing and what we're structured as, but if I knew of other opportunities, then maybe I could take advantage of those. We have extra cash.
Let's talk about an example that you had actually brought up to me after our presentation. This is a hot one on TikTok because it's a cool thing to talk about. So some people may have heard about this, other people haven't. But it's the Augusta rule, or the Eisenhower deduction. So I'll tell the backstory just because I find it, even though it's tax stuff, I think objectively this is interesting. So you got the Masters golf tournament. People rent out their homes for a couple weeks and make a boatload of money. And back in the day, the Eisenhower administration, which is where it gets one of its names, people were not able to take the deductions on marketing their house for rent, fixing it up, getting it ready. They had to report the income, but they couldn't just take the deductions for preparing it for this. And that seemed really unfair. So they were trying to come up with a proposal to keep the rich folks in Augusta happy. And the rumor is Eisenhower was actually at the Masters. So they passed a rule that said, okay, if it passed a law, if you have a dwelling, which is a defined term, that you rent for 14 days or less per year, you don't have to report that income. They were happy. They can go and rent their house, make $100,000 and not report that income on their taxes. Cool. I don't live in Augusta, Georgia. I live about 2 miles from the poorest zip code in the country. My office is about 3 blocks outside of that. I am able to rent my home to a really good tenant and not report that income. That tenant just happens to be my law firm. So up to 14 days per year, we can host management meetings. We can do marketing, take photos, shoot videos. We hosted our holiday party here. We had Santa Claus and Mrs. Claus. Mrs. Claus almost died falling down the stairs. It was legendary. Also a great tax deduction. I do one-on-one coaching with clients, and we do some of them at my house. And that other entity pays rent to my family for the use of our house. So you don't have to put it on Airbnb. You don't have to rent it to some stranger who's going to do God knows what in the different rooms of your house. You can rent it to your business if you're structured properly. And this is where it got interesting for you, I think, because you own a bunch of properties. So, or a handful.
My question to you was, can I do that per
14 days per dwelling? So if you've got the mountain house or the beach house or just a vacation rental in the desert, who knows, right? You can rent those things out. Or here's where it gets really cool. A dwelling has to have sleeping quarters and a bathroom. So my RV counts as a dwelling. And if I throw it up at we put it in Myrtle Beach for the winter. We're going to put it up in New York for the summer. I could rent my RV to my law firm to go and do an event. And I'll give you a really good example of an event. But I also need to mention boats count too. If you've got the boat with the sleeping quarters, and the bathroom. So this thing can really multiply.
Yeah.
Now,
14 days per year.
Whatever the rate. It's really hard to do, right? You get 2 properties and it's like 28 events a year. Like it's a lot. But we start stacking. Again, this is a buffet, right? So we're stacking strategies now. And this is one that came from Bill Gates. So you've got the Augusta rule. You can rent your dwelling for up to 14 days. You don't report the income. Your business gets to take the rent deduction, rent expense. So say you're saving 30 cents for every dollar. This is already money you were pulling out of your business, out of your firm, right?
But now it's not taxed.
Yeah. But instead of taking $1,000 draw or distribution, you collect $1,000 of rent and you just saved 30% taxes on that. 14 days of the year. Okay. Here's where it gets really fun. There was a documentary on Netflix about Bill Gates. Have you heard of him? Where he would take a think week and he would take his little seaplane up somewhere in Washington and land on a lake and go into a cabin, and he would take a stack of books and he would sit there and read and think and have ideas. And the rumor is this is where like Internet Explorer got invented or something. But that whole trip could be a deduction as a work trip, but you could also pay rent just like you would pay for a hotel room if you owned the property. So I'll put all this together. I could go and visit my RV for a week, theoretically leave my wife and kids at home. Maybe not. Go up and work on.
Might have other consequences, but yeah.
Yeah, exactly. Yeah, there's unintended tax consequences. So again, let's talk about how you want your life to look. But I can go up and I can do the strategic thinking. I can work on the business plan. I can work on the big picture stuff that you need to get the heck out of the office to do.
Mm-hmm.
And I can pay myself rent for that time away and deduct my other travel expenses related to that. So that's a really good example of we're not forcing you to spend any more money. This is actually a good thing for your business. I think we could all agree that getting away from the office for a little bit is really helpful. Or hosting those business social gatherings or the meetings and things like that. So it's a fun thing that exists in the tax code that a lot of people don't know about. A lot of their accountants are going to say, no, you can't do that. But they don't bother to say, well, here's what you need to make it happen. You got to have the invoice, some sort of written agreement. You need to make sure your rent is market rate, right? If your house could only rent for $1,000 and you want to charge yourself 10,000, you may be creating some issues for yourself.
Yeah.
So there's rules to follow and constraints to be within. But if it's 14 days a year at $1,000 a day, that's $14,000 that you just reduced your income by. So 30%, you just say $5,000. You're welcome. That right there.
Does anyone want an extra $5,000? I do. Yeah.
And that's one example. We were supposed to come up with examples to get up to 100,000, but that's an easy and fun one. Some of the other ones get more.
Well, that's a quick one, but yeah, multiple properties, and if you really did use it, I know like we're getting ready to have our leadership meeting where we all get together somewhere.
Yep.
But if it was one of my houses, properties, and my business partner has properties, instead of getting the hotels and all that stuff, we could use one of our properties.
It's a great example. We do that again at our home. We run on EOS and we have our quarterly leadership meetings, and we do the same thing. Even if you wanted to put people up in the hotel, but use the home for the meeting itself, right? I mean, there's a lot of options there. So yeah, really, really great example and something that, just like you just started thinking of doing it with your leadership meeting. We throw these ideas out there and people start getting really creative. Oh man, I didn't even know I could do that. And I just thought of 3 different ways I can make that work in my business.
One other one real quick, and then we'll jump to the next example, I guess, that we can pull out. But something I mentioned on a recent podcast that I'm doing, and you got this from a financial planner that does our financial planning for our businesses. But I have another business that owns my real estate properties with my wife, because we do short-term rentals with the properties.
Mm.
So that actually has its own entity. But doing retreats for that, but I'm including my kids. So it's a family planning retreat.
Yep.
What do we want as a family? What goals do we want to hit? What do our kids want to do? At whatever age they could be, it doesn't matter.
Yep.
involving them, having an agenda, going and doing the workshops and sitting down, and then working in some play, some trips or
Yep. Absolutely.
hiking or whatever. And so really, not just thinking about your business, but I want to use it for my wife, business with my wife, but
Yeah.
involving the kids and family.
Yep, absolutely. Yeah, we haven't done this with our 6-year-old just because she's impossible to corral, but our 13-year-old is on payroll in our business. And again, if you've got kids, this is a really common strategy. You can do it directly through your firm, or you can create some other entities and make this happen. But my son goes to the most expensive private school in town, so there's a big checks that we write for tuition. Well, we put him on payroll, and he does work in the office. He's got to earn it, right? But he writes thank you cards, and he updates some of the scorecards that we have, and he does shredding and filing and a whole bunch of other stuff that he hates. And we pay him for that about $13,000, which is a fair wage for the work that he's doing. So that's, again, a deduction to the business. It's a payroll expense, just like paying any other employee. But we pay him under what's called the standard deduction. So he doesn't pay income tax on it. So we just took $13,000 of income that we would have paid taxes on at 35% and took it to 0%. So again, there's another $3,000, $4,000, $5,000 right there. And again, now let's start stacking strategy
per child, right?
Per child, assuming you can get them to work. Yep, they got to earn it. There's a lot of people that love to put their kids on payroll and not make them earn it, which is bad tax advice and also horrible life advice. But we'll save that for another day. So we will also, this year is the first year that we're doing it. We will also set up an IRA for our son. So we can put in whatever it is, $6,000 or $7,000 into that account to save for retirement, no income tax on that. And by the way, building some wealth for him. So we've got him on payroll. We'll get him a retirement account set up. He'll have to work a little bit harder this summer to earn that extra $6,000. And so we're piling these things up. Now, when we travel for business, his travel expenses are deductible as well, because he's an employee and it's necessary for him to travel with us to some of these things. Typically, if the kids fly, you can't write that off. A lot of business owners will pay for their tickets, maybe the business owner, maybe the business owner and the spouse, and then they'll redeem miles or points for the kids or pay out of personal funds. But if the kid's an employee and you can make the business case for it, now their travel expenses are deductible as well. So again, this is the whole point of having this conversation throughout the year. If you traveled last year with your kids for business stuff and you're meeting with your accountant February 15th, it's too late. Like we gotta be proactive about this. We got to do this in advance. So huge opportunity.
One of the big things, one of the big things I learned from you there is, for a lot of this stuff, like the Augusta rule and all that stuff, is documentation. So having a way to document this stuff, and you guys had like really cool spreadsheet to make it easy, but it comes down to documenting it, and that's all you need to do.
Yep.
And so planning this stuff out, having a strategy, knowing what you're planning to do. You can't go back and say, well, last year,
Well, it's like anything else in business. You want to have a successful business, you'll have a business plan. You'll have a marketing plan. You'll have a hiring plan. You'll have a budget, a financial plan. Successful business owners also have a tax plan. It helps them keep more of the money that they're already making and build more wealth. It's part of being, I want to say it's part of being an adult, but it's a next level up from that. It's part of being a successful adult is you have those plans.
One of the other things, and I'm not sure what's on your mind and agenda while we're still going here, is well, we were in Chicago, right? And going to a business trip and working in there, leisure time, right?
Yep.
And using, I think it's a percentage of the time there for business, and then being able to pay for your flights and all that good stuff. So
business travel is one of my favorites. So the rule, if you're traveling domestically, is if 50% of the trip is business, you can write off. I'm going to say all of the expenses, but that's maybe a little too broad. But flights, hotels, meals, tips, a lot of the related stuff there. If the trip is 50% business, and domestically, Internationally, it's 75%, so the number is a little higher. But let's do the math on this 50%. You're counting days. Well, if the work is 4 hours and 1 minute and an 8-hour workday, that day counts. That's a workday, right? So the way that it worked with this seminar, travel days don't count, weekends don't count. So the 8-figure firm event there was something Thursday night, Friday, and Saturday. So you could have landed Thursday morning, been out of there Saturday night. There's your trip. Or you could have actually landed Wednesday, had most of the day Thursday until that afternoon event. Friday's your work day. Saturday and Sunday don't count. You could have actually stayed until Tuesday and deducted the whole trip. So Wednesday to Tuesday for an event that really went 2 days, you could have documented and made the case to write off that entire trip. So yeah, my wife and I have a bunch of friends in Chicago. We didn't do the full 7 days, but we did tack some extra days before and after to do fun stuff and take that trip and get away for a little bit. It was actually our last trip before our nanny left town, which was really sad. A lot of conferences happen in Vegas, or a lot of conferences and stuff happen in Orlando. So you can tack on the additional days in Vegas if you're that type of person. I can only usually handle 2 or 3 days there. Orlando, you want to go to Disney, take the family to Disney. You can make the case that if you're traveling there for business, you can extend that trip for way longer than you expect when you do the calculation. And the whole thing becomes deductible. So again, using the business to support the life that you want.
I mean, that right there has got to be, I mean, for some folks listening, running a big law firm, or myself, that could be a ton of money right there.
Yep.
I'm going to the Bahamas next week, 2 weeks from now, whenever this podcast comes out. I'm not sure when, but we're not doing any business there. But thinking back how much that trip cost, it's pretty expensive. So, thinking that ahead and being like, okay, what can we do over there? How would that work?
That's a really good example. So keep in mind, like, I love saving money on taxes. I love implementing these strategies, but also sometimes a vacation just needs to be a vacation. So my wife and I are going to Bora Bora later this summer. It is a blowout trip. It's like, this trip cost more than our first house, right? But we want it to be a vacation. We don't want to have to check those boxes and do those things and document the outcomes to justify the work portion of it. There's plenty of other opportunities for that. And but I will give you another. She's so funny. I have an old truck. I have a 69 Chevy pickup truck, and it's like,
at least it's a Chevy. That's good.
Patina paint job, air ride. This thing's totally fat, and I got the logo on the side. So the business owns that truck, and I basically can only drive it for business purposes. So I said the other day I was going to take the kids to school in it, and my wife's like, you better track those miles because we got to keep it above the percentage, So I said, well, it works out great because I'm just going to go out to breakfast with one of our employees next to the school. So now it's like an offsite meeting, and I can get the miles for that. Like, such a minor thing, but whatever. I spent $30,000 on this truck, and I was able to write the whole thing off. I also have another truck, like the bigger truck, like that we tow stuff with, and it needs tires and wheel bearings. And I told my wife, like, oh man, I need tires and wheel bearings for my truck. And bless her heart, she goes, all right, we'll make sure the business pays for it because the business does own that vehicle because we track the miles and make that work. And it's like, oh, hell yeah. Like, I was going to buy tires and wheel bearings anyway, but now it becomes a business expense. So either I get to pocket that difference, or I'm probably just going to buy bigger tires. So yeah, really great example of like having that person on your side of either helping you implement the strategy or learn about strategies you didn't already know about, or just say, you know what, it's okay. Just go to the Bahamas and enjoy the Bahamas. And then when you get back, let's start talking about how we handle this for the next trip.
Yeah, well, yeah, but so I agree with that. To your point though, my wife's like, oh, you're going to Chicago? Maybe I can come. And it's like, okay, well, yeah, now when I'm going to conferences or business trips, like they even have that thought to be like, hey, well, we can actually have the family go, or my wife can go, and we can actually have fun and enjoy it and see places that we normally wouldn't just go to.
Yeah.
Like I can go to Chicago.
My internet cut out there for a second.
Freezing up a little bit.
Yep, I think it was on both ends. Yeah, I think that's a good example. And here's where I think people get in trouble is they hear ideas like this and they say, "Oh, this guy on this podcast, this handsome, witty guy on this podcast, if they're watching the video, said we can go to Disney and write off the whole trip." And that's not what I said, right? What I said was there are rules to follow, there's planning you got to do in advance, and there's outcomes you have to have from that trip to properly document it. But again, knowing that these things are available. The other example we get all the time is the people call and they say, how do I write off my Rolex? It's like, well, we can come up with something maybe but it's going to be aggressive, right? It may not hold up in an audit if you get the wrong auditor sending you the letters or showing up at your door. So why don't we instead go implement these 15 other things that you haven't even considered, and then you take the money that you saved and go and buy a nicer Rolex, right?
Yeah.
But exactly. I think people get hung up on, I made my Rolex a deduction because I filmed a video for Instagram and I wore the watch and that's enough. No, it's not. No, it's not. Like you're getting greedy, you're getting aggressive, you're making bad decisions. We get that all. I love the influencers taking the pictures in front of the Lambos. 80% of the time they're rented. 10% of the time they've done it the right way. 10% of the time they bought it and are trying to write it off and being stupid about it. So, no offense to the Lamborghini owners out there, Luis.
I just just love that there's opportunity, right? And there's a lot you can do out there. And I was just thinking too, like even with it was kind of like a cross between like I was thinking about like the business travel pair, like you talking about Bill Gates, like he goes off on his own, he does his thing, he can write that off, but I mean you can kind of pair some of that together, like with the family trips and the business stuff, and do you have to even have like I could go on my own like business kind of like retreat, versus going to a conference and then still have the family and write off the other part. So I assume you can get really creative.
Yeah, absolutely. I mean, and we've done this so many different ways, even in our own family. You know, we do the trips with all four of us. We do the trips with two of us. And then every now and then my wife and I allow the other person to take a solo trip. So my book just came out. We're doing the big launch next week. And when I got the first manuscript done, I had to go and review it. And I took my flight instructor and we flew to Traverse City, Michigan, and I rented a cabin for a couple of days on the lake. And it was me and the laptop, and it was awesome. Like it was the best way to get through that type of work. And also I got to wake up every morning on the shores of Lake Michigan, and it was really, really cool and inspiring. So yeah, I try to make it fun. I try to make an adventure out of a lot of this stuff.
That's what I love about it. And so yeah, there's a lot of things that I need to apply, and a lot I learned from you that day, just listening to you and here, of course. And there's other things you mentioned too. I mean, there's a lot more. I know that you can in like horses. You mentioned horses. I was like depreciating horses, and even like just God, everyone listening. It's just like there's so much you could think. And then I want to say you said that you like to race cars. You can have your own racing team or your own business doing the thing you like and love, but it could be a business.
There's some influencers out there. I follow all the tax strategy guys and girls on social media, and there's some people out there that talk about setting up these like family management companies to provide janitorial services in your home, and there's legitimacy to what they're saying, but it's not sexy, it's not exciting, and it's really complex. And I think before you get to the point where you're trying to find that way to make a legitimate, ordinary and necessary expense out of your housekeeper or your nanny or additional vehicles, I guarantee there's other stuff that you're missing. There's other opportunities that are so much easier and so much less complex, and frankly, a lot more fun. So we do. I'll pitch the guide that we have, since you already dropped it on the website. But if it's Pennywise.tax /save, SAVE. It's got a checklist, and I don't even remember. It's 7 tips or 12 tips, a couple of the ones that we went over today. And the idea is if you look at this checklist and you don't know that your accountant is implementing them, we talked about this earlier, they're not, I guarantee it. So Pennywise.tax /save, or if you go to the homepage, I know there's a link to the free tax guide on there, but we've gotten a lot of positive feedback on this guide. Again, I think it's a lot more fun to talk about this stuff. It's pretty boring to read about it, but to just see, my accountant told me I couldn't take a home office deduction, and here you are telling me that there's ways that I could actually do this. Or my accountant never told me what I should be doing with my retirement accounts or my work trips or anything like that. Or my accountant never told me there's a way I can write off my race car or my airplane or my horses or my vacation house in a tax advantageous way. So free guide.
So for me, like some of that stuff is huge. And I came back with a few questions, and we asked a new CPA firm that we're moved to, and they confirmed, like, yeah, you can do that. No, yep, you can do that. We're just
wasn't it really nice
to hire other CPAs because we never heard anything from them.
Yeah,
and they always would be like, "Oh no, you can't do that. You can't do that. You can't do that." And
so there's categories, right? There's the accountants who do nothing. There's the accountants who say you can't do it. There's the accountants who say, "Oh, thank you for bringing this idea to us. We'll try and implement it."
Yeah.
And then there's what we do, which is you bring us some ideas, we'll bring you some ideas, and we'll put something in place here. So
that right there is the best. Yeah, the most important thing like. That's what we've been lacking, and I bet a lot of folks listening is we bring, like, we're in masterminds and business owner groups.
Yep.
We hear stuff and we go, hey, can we do this? And then they go, probably not a good idea. I wouldn't.
Isn't that it? And that's always the reaction. They sound
terrible,
like lawyers. They sound like lawyers. Here's all the reasons why you can't do that. Yeah. But give me, like, theoretically, if I was going to do it, what would be the best way to do it? How could I make this happen?
But the problem is I still had to bring it to their attention that's even a thing. And so that's the biggest problem. And I feel like most of you out there listening, you probably have an accountant where you just look at your taxes, you sign them, and that's it. But being proactive, like if I was a marketing agency company and we're not bringing new ideas or new marketing strategies to the table, we're going to get fired at some point.
Yep.
That's what's going to happen. But that doesn't happen with our accounting firms, our CPAs. We just, here's my taxes I owe this year, and we just keep slugging along.
It's a perfect analogy, and I don't know why it is that way, but we're here to fix it. We're here to bring the ideas, help implement them, save you money.
Well, I'm going to be saving a crap ton because of just the home office thing, which we didn't even talk about here. I own a home. My office is 30 minutes away. I'm told you can't write off anything because it's your home office, which you don't really work at, and blah, blah, blah. There's too many, it just doesn't work. And then when you told me,
yeah, you can.
Yeah, you can. And not just the home office portion, but all the other expenses and a portion of them, the travel in between my two offices.
A lot of mileage.
I was like, so it's just, there's so many things, so reach out to Adam, everyone. And there's ways you can be saving a ton of money, over 100,000 for some of you. I mean, multi-millions, we're multi 7 figures. Lots of opportunities there.
Yep.
To save a lot more than $100,000.
Especially for those fast growing businesses too. If you're going to double the size of your business, then yeah, you definitely want to stay ahead of this, because those growing businesses suck up cash. And the last thing you need is that big tax bill at the end of a year where you've been reinvesting in the business and you don't think your bill is going to be that bad. So yeah, happy to chat with anybody about this.
And that's the other thing too. Hey, we're having a crazy year, or we're about to blow up and expand. What can I do? Like, how do I make sure I'm not screwed at the end of the year or next year?
Yep.
So yeah, tax strategist, new term. I didn't even know about it. So
love it.
I wish I did. Well, everyone, hey, thank you so much for tuning in. Adam, great stuff. I know we could just sit here and try to talk all day about all kinds of different things, but I think this leaves everyone with quite a bit of good content. I'm sure we can have you on to dive into other areas soon. So Anything you want to add before we go? And what's your new book that you have coming out? Because I just shared that on Facebook this morning.
Yeah. So everything your kids wish you knew about owning a business. So my grandfather was an entrepreneur. My parents were entrepreneurs. I'm third generation. I feel like I had an unfair advantage. My kids will have an even more unfair advantage. And I decided to get some of the lessons down in writing and help more people. So like I said at the top of the show, like I'm an entrepreneur. I happen to own a law firm, and yeah, really excited. It was a cool feeling opening up the Amazon package and having my own book sitting in there. So
I absolutely love that. And so I'm doing these family retreats. I'm teaching my kids about business.
Yep.
I got my son who's 12, and my daughter too, doing their own businesses and outside of like my business and putting them on payroll, but them doing their own things to actually make money. But then I'm teaching them about money, teaching them about all the things that they don't look. Well, for one, they don't understand it, but they don't have a good view of it. They don't even know what it means, or if they think it's bad. It's so many things.
It's money and it's time, right? You're not missing the soccer game. Are you taking your kids to the Bahamas?
Yeah.
Great example, right? Like that like my parents worked their asses off. They were pretty successful, but like we didn't vacation. Yeah, so like I coach both my kids' soccer teams. We take the awesome trips. We do the cool stuff. Like, yeah, we make a whole bunch of money, and yeah, we have a huge impact, but it's not because I'm hustling and grinding. And I think that's one of the, that was what I really wanted to get out in the book, is like,
that's awesome.
There's more to it than being self-employed. You can have a small business, a growing business, and really live a great life.
Absolutely. No, I love that. So I'm very excited to pick that up and to read it and share it with my kids. So
cool, man. Love it.
Well, Adam, man, I love everything you're doing. I appreciate it. And again, we'll see you again soon. Everyone else, thank you so much for tuning in. Reach out to Adam. Go to his website, and I'm sure he's happy to help you out.
Yeah, I'm easy to find on social media too.
Same here. If you want me to connect you together, shoot me a message, LinkedIn, whatever.
Love it.
You can find me there. So
cool.
All right, everyone, have a great day. Go grow your law firms and save as much of the money as you can along the way.
Legally.
Adam, stay on with me. Everyone, have a great day. We'll see.